Okay. Well, good afternoon, everybody. I hope everybody had a great Memorial Day weekend. Welcome to our class today, Evolution of a Master Trader. My name's Jeff Gibby, and I'm going to be kicking us off. Just want to make sure you guys can hear me. If you can hear me, let me know. Thanks. Let's go ahead and get straight to the legal disclaimer. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of said software or any trading strategies or any information provided in connection with the company. All right. I'd like to personally welcome back Adrienne Toghraie to the MetaStock webinar room. Adrienne, it's good to have you today. Adrienne's been somebody that I've known for many, many years, but for some reason we forgot to schedule her for a class for a while. So I figured it might be a good time to get her in here. She's always gives such a great lesson, and it's a little bit of a change of pace. Normally we're in here talking about strategies or taxes or something along those lines. So it's good to get somebody in here once in a while that kind of has a good game plan around trading psychology. So Adrienne, I'm going to bring you on here now.
Thank you, Jeff.
Is there anything you'd like to say about yourself?
Let me see. Nothing more than has been written on my first slide. I've been working with traders, brokers, investors for the last 24 years. I've written 13 books, actually 15 books, but 13 books for traders. And I've been working with some of the highest paid traders and some of the top traders in the world. And the kind of methods that I use are neurolinguistic programming, timeline therapy, hypnotherapy, gestalt therapy, and about 20 other modalities. So that's where I'm at. And the way I do that is through private coaching, through mentorship programs, through my books and tapes, and not tapes, CDs. They used to be tapes. And that's a little bit about me. Well, thank you, Jeff, for having me, and thank you, MetaStock, all the people there for supporting the work that I do. In my years as a trader's coach, I've seen and identified the path of the evolution of a trader from novice to mastery. I've created a model by putting traders into novice to categories. I'm sorry, the ceiling hook has got me laughing. This doesn't mean, however, that a trader has to experience every one of these categories in order to be a profitable trader. If a trader knows and chooses to make the right choices from the start, he can be like the few traders I've known that have made money from start, but it's been my experience that most traders won't. So I put together these 5 categories of traders in order for you to identify where you are and what you have to do to get to your next level of success. Ah, good, it works. The first category is what I call the into-wishing trader. This is an individual who comes into trading but doesn't treat it like a business. Perhaps he's read 1 or 2 books on the subject, such as Trading for Dummies, and maybe his education makes him think he can be a top trader because he's intellectually advanced, but the fact is that trading is a separate business from other businesses. So rather than doing the hard work required to get up to speed in this new field, he's into-wishing that he will succeed. The second type of into-wishing trader is the mechanical trader who refuses to give up the fact that his system that took over 2 years to put together doesn't work in current market conditions. The third type is the floor trader who assumes that he has the ability to do electronic trading without adjusting to the skills of a computer trader. The fourth type is a trader who has been a buy 'em and hold 'em person of the past and thinks that the same rules apply in the current market conditions. While there are traders who do earn profits as investment traders, the rules of the past don't always apply. In order to be successful, the into-wishing trader has to get to another category, because if he stays in this category, he will lose money and they'll find that trading is not a viable way to earn a living. By the way, I will be open to questions at the end. If you have a burning question, of course, write it in there, and I'll get to it when I can. So, why are the intuition traders stuck in this category? Well, they don't know any better because they've isolated themselves. Obviously, most people in this room are not in that category. Or they're too stubborn to make changes in their system or themselves because it costs time, money, and they might have to face their demons. Or they think that because they received a high education in another field, this automatically entitles them to earning money as a trader with no education. Or they don't have the resources. Now, I'm going to be talking about resources a lot, so let me tell you what I mean by them. The intelligence. The kind of intelligence you have to have is you have to have the ability to follow a recipe, like Jake Bernstein always says. You have to have the ability to follow a set of rules. You have to have street smarts, and of course it helps to have wisdom, intuitive wisdom. You have to have the kind of intelligence that allows you to read the many books that are available to you and to understand the lingo. Then there's money. You have to have money. I call it inventory for your business. If you think of it as money, then you might attach it to your children's education, your retirement fund, your savings account, and you have an emotional attachment. And when you lose it, of course, you're going to be feeling terrible. But when it is inventory for your business, you have a tendency of thinking of it a different way. It's your ability to use it to make more money. Education. The kind of education you have to have is you have to have a basic knowledge of the trading world, and then you have to have be specialized, and you have to understand software. Another thing you have to have is time, and I call it energy time, because if you're working 8 hours a day and driving to and from work, and you have children and a wife, and then you go to your computer and you're exhausted, you don't want to associate being exhausted with being a trader. You want to have your high energy time for trading, even if it's just 1 hour a day. Then you have to have support. So what I mean by support is if the people in your life want to take you to Gamblers Anonymous and put a straitjacket around you, you know you don't have their support. And it's your responsibility to get their support. And number 5, let others influence you in the wrong direction. There are so many people that want to give advice about where to put your money. If that advice is not coming from someone who understands the markets because they've traded the markets and because they know about trading and they have a success in trading, I don't know why you would want to take advice from them. So what do you have to do to get out of this category? Decide if trading is really for you. First of all, you have to have the passion. If you go to your computer and say, damn, it's a new day, I just can't wait to trade, that's the attitude you have to have. You have to have the commitment. And commitment to get through some hard times, because you might go through 1, 2, 3, 4, drawdowns, and it can be pretty scary at times. Then you have to gather the resources, like I said before, the intelligence, the money, the education, the time, and support. Then you have to develop a plan and follow it. A plan, you might call it a strategy, you might call it your criteria for entering and exiting a trade. It doesn't matter what you call it. It's your theory of why it would work. Now, I have found stories motivate traders to realize that no matter what their situation, where there's passion, there's a way. The story I'm about to tell you is a true story about a truck driver named Carl who dropped out of school in the 7th grade because he didn't have a choice. His father died and his mother couldn't hold a job because she was dying of cancer. Carl had to support his mother and his younger sister. He first ran a tractor, did odd and end jobs on a farm, excuse me. And when he was old enough, he took to the roads as a truck driver. As a truck driver, he had a lot of time to listen to talk show radio, and one day there was a motivational speaker who asked, How do you define yourself? He answered out loud to himself, I'm just a high school dropper who will never be more than just a truck driver. The announcer gave him just enough time to answer before he asked, what would you like that answer to be? Carl thought for a quick second and said, I would like to be smart, wealthy, and handsome. Then he was asked, what can you do to start right now to make what you want happen? Carl started using his time in the truck to study for his high school equivalent and continued to listen to how-to books for the next several years. One evening at a hotel stop, he heard an infomercial asking, do you want to be rich beyond your dreams, and continue to give advice about how to become a trader? Carl immediately said yes, bought the course, and scheduled himself to trade a few hours a day from his laptop. He hit a wall of doubting himself, his ability, and whether he was stretching too far when he lost over $50,000, and that was money that he got from the sale of the farm after his mom died. Fortunately, Carl decided to go to a trading conference and choose the right person to mentor him in becoming a trader. He had many pitfalls along the way. I met Carl at a conference he was attending in Las Vegas. Now Carl is a successful trader. It takes passion that motivates you to do the hard things to be a trader. If you have it, then you too can become out of the category of the intuition trader and go into the category of the intuition trader. The next category is what I call the gimme trader. These are traders who want the answers from others. Maybe they get answers from chat rooms, or they align themselves with another trader who gives them direction, or they buy a system or methodology and don't test it. But ultimately, they're not responsible for their own decisions, but base them on the advice of others. Now, while it's a really, really good idea to get your advice from others that know what they're doing in the beginning, you ultimately have to be responsible for your own choices. The second set of traders in this category gives their money to others, such as brokers or money managers who can make the money. However, most brokers are not traders. So do due diligence before hiring a broker and research the brokerage firm's compliance record as well as the compliance record of the individual broker. You want to know where your hard-earned money is going. I do recommend that you have two accounts, one where you're paying the lowest commission and another where you have the advantages of a full-service broker. Many brokers have access to information that will make it worthwhile for you to maintain full brokerage services. And with some brokerage firms, you can have access to both services. Now, there are two types of money managers. Unregulated money managers are traders who can only trade a certain amount of money and usually only for their friends or family. These money managers present you with a big risk because you can't check their background. Just because they have a lot of money doesn't mean that they can make money for you. They might be enjoying a luxurious lifestyle simply because others gave them money to manage and not because they have the ability to make money for their clients. On the other hand, it's easy to check the track record of regulated money managers because they are required by the SEC and other regulatory agencies to present you with their track record. Of course, in Madoff's case, he was creating false records and false statements. And there is that problem too. The problem with giving your money to a money manager is that some of the best regulated money managers will require $250,000 from individual clients. Now, most traders don't have that kind of money, and if you do, you're taking a big risk by giving it all just to one individual. I'd say the best money managers return between 6 to 8% these days. If you're looking to those money managers who produce a higher return, you're also looking at money managers who are usually not as risk adverse and perhaps in the long run are not able to keep up with that kind of momentum. The question is, do you have the ability to manage your money managers? Do you trust yourself enough to choose the right one for you to do their job? So why are they stuck in this category, these gimme traders? They don't have or lost their confidence in themselves, in their strategy. They want other people to take responsibility. Responsibility means taking action. They don't have the time or energy, as I put it before, energy time. Or they're afraid to leave the security of their job. If you've been raised in a family where one or two of your parents are bringing in a paycheck and you see them pay the bills every month. Sometimes that doesn't happen in trading. You know, trading, yes, you can make a lot of money, but there can be months where you don't make anything. So what do you have to do to get out of this category? Build your self-worth, build your resources, build in your self-worth, your self-esteem, your self-confidence, your self-values. So the next category is the struggling trader, and this is a category that most of you, I would suspect, are in. This category includes a wide range of traders because a trader in this category can make no money or he can make millions of dollars. What is true for all of these traders is that they're inconsistent. That inconsistency can be on a daily basis, a quarterly basis, or a yearly basis. The fact is that they're not consistently bringing in the return that their system or methodology will allow. Traders in this category are missing part of the equation that makes them traders who are able to receive the total benefits from their system. There's a wide range within the three types of struggling traders. The first can range from someone who's not making money to someone who is breaking even, excuse me, to someone who's making and losing money. These traders did not necessarily receive the type of education necessary to feel confident about their ability or their methodology. These are traders who perhaps didn't put together a business plan that includes their system or methodology and contingencies of everything that can go wrong or right with the best possible outcome to keep them in the game and make them accountable to themselves. Or they haven't kept a daily journal to identify where their inconsistencies are in following their rules, or they haven't done periodic reviews to improve their system. These traders are just beginning to realize that discipline is the key to making profits. But at this point, they're not willing to invest in more than a book about discipline issues. Or they haven't back or forward tested their system so they can feel confident that their system has the probability of being successful. Until they have taken all of these steps necessary to get to the next category, they will remain inconsistent. You know, just about 20 years ago, there's very little education available for traders, so a trader either learned to fail his way to success or sought out the few traders who were willing to mentor them. In this day and age, there are almost too many so-called trading schools that are willing to teach what they believe to be what you need to be successful. It's important that you do due diligence in seeking out what's right for you. If you have the resources, I recommend a school that gives an overall education before they specialize. If you're working with limited funds, then read books about traders so you can figure out with whom you identify with and then get an education specific to that type of trading. The second type of struggling trader is someone who has given himself a good education, has a business plan, but only brings in enough money to supplement his income or is always struggling to feel confident that he will last another day in trading. These traders haven't taken the time to handle their psychological issues and keep them from being a top trader, and sometimes they don't see the need for it, or they can even make fun of it. Excuse me, I need some tea. The third type of struggling trader is someone who's making a comfortable living or even a great deal of money from trading, but knows that if he was consistent, he would be earning a lot more. Perhaps he's even looked into the psychology of trading and taken a seminar, has done private work, and has improved his results, but knows that he still has more work to work on to be as successful as his system will allow. The story I'm about to tell you is a true story about a fellow that I worked with many years ago who wanted to be a top trader. He had made $10 million that year. He was working for a gas company, and I met him at a seminar that I was conducting, first in Canada, then in Kansas. And he said, you know, I want you to be my secret weapon. I want to trade like the big boys do. And we worked together for 2 days, and the next year he brought in $36 million. He writes to me and he says, still leaving money on the table. And I didn't know what I was going to work on, frankly, but I discovered that, you know, you peel one layer of onion, you get another layer. And we worked another day together, and the next year he was in the 50 million category still leaving money on the table. This went on for several years until last year he sent me an email. 118 million, still leaving money on the table. Now, you wouldn't consider him a struggling trader, perhaps, because of the kind of results that he was getting. But the fact is that he was inconsistent about what he could bring in based upon his strategy. So why are these traders, these struggling traders, stuck in this category? Because they're inconsistent. I met a trader a long time ago when I had a contract with the New York Mercantile Exchange, and there was a floor trader who said every year, in about August, September, I lose a lot of money. And when I found out, when he came to a seminar and I found a little bit more about him, he took a vacation at that time. Now, he was taking his wife's vacation. She liked to go on cruise ships. She liked to go to Las Vegas. Well, his idea of vacation was kayaking, fishing. So I said, you have to go on your own vacation. You have to take your wife's vacation too, because if you don't do that, you can have other problems. So there can be many reasons why you're not consistent. Overcome self-sabotage. Some of the self-sabotage issues have to do with fear of success, fear of failure, fear of being wrong. Limiting beliefs. A limiting belief is what's true for you. And if you have a belief like money is the root of all evil, then you wouldn't want to be wealthy. Or conflicts. Conflicts are two beliefs that fight one another. Part of you says go, part of you says no, and you're fighting yourself. So what do you have to do to get out of this category? Build your technical skills. Raise your ability for taking risks, because your strategy is designed to take a certain amount of risk. You need to be able to take the kind of risk that your strategy will allow, for your strategy to allow you to bring in the most amount of money. Build your inventory. That's the money for your trading account. Get the environmental support you need. If people are getting upset with you for what you're doing, that's going to always be a hard road to take. Build your self-values, your self-esteem, your self-confidence. Every time you do something that you've never done before, it opens the neural networking of your brain, and it makes you see opportunity in a different way. Released repressed emotions. If you make money, boom, lose it, make money, boom, lose it, it's most likely that you have repressed emotions. Overcome your self-sabotage that we talked about before, all of the fears and limiting beliefs and so on and so forth. The next category is what I call the average good trader. This is a trader who is consistent about making money and who follows his rules. This type of trader has a wide range of return, depending upon how much money, trading capital he has to work with, the level of return his particular strategy will yield, how much he's willing to risk, and if he has been willing to do whatever is necessary to develop his psychology for it to bring out the best in him. While traders might not have an issue of being consistent, they still might have an issue that stands between them and their next level of success. The average good trader will have a solid, successful, and long-term career as a trader, and all beginning traders would be fortunate to reach this level of trading. So, how have they reached this level of success? They have completed everything a trader needs to do in gathering resources and having a solid support system. And what does a trader need to do to become a master trader? Have enough resources to support that next level, have the will, the psychology, and the know-how to add what I call an intuitive filter. So the next category is the intuitive master trader category. This is a trader who has done everything necessary to be a top trader and then goes one step beyond mechanical indicators by adding a filter of intuition. Now, there are many excellent trading systems out there, Gann, Elliott Wave, Ross Hook, just to name a few, and there are many traders who teach these type of systems. Unfortunately, there are also many traders who discovered that these systems don't work for them. Traders who teach these systems don't teach the intuitive part because most people have to learn that on their own. And while many of you have had the experience of knowing where a trade will go, you know, that knowingness that's beyond your mechanical indicators, most people can't quantify that filter or identify it as something that they can rely on. An intuitive trader can. These intuitive master traders know how to work with their right and left brain synergistically to balance their logical and creative side. Reliable and intuitive trading is something that I've taught many of my clients with great success. It's not something the traders should try to do on their own without handling their psychological issues first. However, many traders attempt to do this and find it is disastrous for their bank account. But those traders who do take the steps necessary to fully train themselves as traders and handle all of their psychological issues can become intuitive master traders. At this point, they are ready to reap the top rewards of their profession. So how do they reach this level? They have a system or method that they believe in because it was tested. They follow their business plan and set rules. They have overcome their psychological issues. They have developed a reliable intuitive indicator. So what do you have to do to maintain this level of competency? You have to maintain your physical, emotional, and mental health. Stuff is going to come up in your life. You know, I've worked with people like 10 years ago and find out, you know, that the parents died, they've gone through a divorce, and they've accumulated more stuff. You have to maintain your psychological balance. You have to stretch to the optimal level of risk that your particular strategy will allow. And if you have to monitor and improve your intuitive skills. My last story is actually my first story, but the end of my first story. Remember Carl, the truck driver turned trader? I would say that he was one of my best clients because he came the longest way and made it very big on his own. Sometimes a person needs one boost, one motivational kick, someone who believes in them, or all of the above. But first you need to allow yourself to hear the answers to what you're looking for. Then you need to take action, make a plan, and follow through on that plan. You need to allow for the bumps in the road. And you need to support your neurology along the way by taking care to improve your psychology. Carl, the truck driver, is now a multimillionaire as a result of trading, and he's earned a degree in finance. He's now going for his master's, and he's a happily married man with 3 children. The only thing he didn't get from his initial wish is that he's still not handsome, but I don't think Carl would believe you even if you told him that. Well, I look forward to meeting you on your path to becoming a master trader. Please go to my website for more information, tradingontarget.com. And at this point in time, I'm ready to take questions. Okay, good. How do you recognize I have repressed emotions, and how do I release them? John says he has no sound. Jeff, if you're still listening, can you hear me?
I can.
John, you might have to go out and come back in again.
I'll type him.
Okay, so John might have to go out and come in again. Okay, back to the question. How do you recognize if I've repressed emotions? If when you trade and your emotions get the best of you, and you every time that happens, or you're tired, or and when those things happen, you make mistakes. And you could go for a long period of time of making money, and then something happens, you're tired, you're sick, you have a fight with your wife, and then you lose money. That's a good signal that you have repressed emotions. The best that I can offer you on that particular issue is you need to monitor yourself on a daily basis. And if on a scale of 1 to 10, 10 being best, you're not feeling 7 to 10, that is the time that you should not be trading. You know, stop for the day. Or if you see that you have a couple of losses in a row and it's affecting you emotionally, stop for the day, or take a walk around the block. Now, if you have these repressed emotions, most likely you would need some subconscious work, the kind of work that I would do in my private work. But at least if you can monitor yourself over a period of time and keep yourself from trading when you're not feeling well for whatever reason, that is a good way to handle the repressed emotions. That's my conscious type of answer that I could give you that you could do on your own. The other stuff you would need work. Okay, while I'm waiting for more questions, I'm going to give you a short commercial and ask, oh, there's more questions. Okay. From where we can get methods and systems, from where can we get methods and systems and a mentor? Okay. Methods or strategies, you can get them from certainly MetaStock interviews a lot of people who have methods and systems. You could just look them up online and find many, many types of systems. There are some people who rate systems. I know Sonny Harris does. Now, a mentor, if you're talking about a mentor for trading, to teach you trading, there are many people out there. I can't give their names online, but if you do my trader's evaluation, I can tell you specifically which ones are good for you. Mentorship that I do is purely on the psychological part of trading, and I give mentorship only to people that have taken my seminar or have done private work with me. Please say more about intuition, how to recognize messages from your own intuition, give examples. Everyone has the ability to intuit. It's something that you awaken in you. It's not something that that some people don't have. But in order for it to be reliable, you have to take care of the psychological issues. When I say intuition, it's like you know that you know. There's a strategy where you have your mechanical indicators, but there's something about it that you know that is going to be extremely good, or you know that it's not going to be good before it even happens. Now, there are several levels of intuition. There's the intuition of knowing what's going to happen right after, and there's the intuition of knowing what's going to happen after the first intuitive indicator. Now, that takes some work. So what you can do is, on a scale of 1 to 10, 10 being best, you could say, how do I feel about this trade? And do that over a period of time. You continue following your strategy, but you add that element to it, and see if you can intuit just by how you feel about it. If you've been in trading for a long time, most likely that will be there for you. You mentioned periodic review. Can you elaborate how often is the best time to review? 3 to 4 months. You don't want to review sooner than that, because you have to have a certain amount of information on it. Now, periodic review, what you should do is every evening you should be writing, you should have all your strategies written out, how you felt about it, how it turned out. Did you follow your rules? What did you learn? And once you have that all that information, then you have information that you can review 3 to 4 months after you've gotten into trading. Do you suggest to leave job and do trading full-time? Full-time trading is full-time money, not full-time hours. You have to prove yourself and to your family that you can do full-time trading before you get into it. Many of my traders work full-time trading for 1 or 2 hours a day. That's it. and they make more money than they make in their full-time jobs. So when you can prove to yourself that in 1 hour that you can be consistent about making money, you have at least 6 months to a year of money for your living expenses, and you have about at least $50,000 in a bank account to trade with, then you can start considering the possibility of leaving a full-time job to do full-time trading. How far back do you back test to know it's good? Back testing, it depends upon the commodity. Generally speaking, because you can back test till way, way long ago and find that the markets were totally different, especially in the 90s. They were very different than they are now. I would back test 3 years and take the first year, the third year, the second year, and see if the back testing is good for each one of those periods of time, and then the whole testing on the whole 3-year period. That is, let me tell you, that's a very general answer. For some people, back testing is good for, you could back test for a few months and that's all you need. It depends upon how much your time frame is. You know, are you the kind of person that has 7 to 10 trades a day, or are you the kind of person who has 1 trade a week? Certainly if you have 1 trade a week, you need more testing. Okay, so good questions, guys. I'm going to go on to my commercial in a second. So ask me another one. Is there a good place to get sample trade plans? Sample trade plans. I know Sonny Harris has a book coming out about that, and there is a doctor, I can't remember his name, but he compares trading plans, and there are quite a few people who have people that come online that will give you a sample of what they do. You know, it's hard for me to recommend people because unless I know you, I can't recommend anyone to you because I could be recommending totally wrong people. Okay, while you add more questions, I have a home study course. The home study course has winning edge 1, 2, 3, and 4. If you like this particular webinar, that was one of the chapters in the book. Of course, the chapter is longer. I talk about every way that you self-sabotage yourself and specific exercises to overcome that self-sabotage. There's a business plan that took me 12 years to put together, and I asked traders in my seminars, what's your criteria for entering a trade, exiting a trade, what's your money management? When there was no more answers, I knew I had a book. There's an evaluation and consultation with me on the phone. That's worth the price of the course. The course is $650 online. Those of you who are listening in till Friday, the price would be $600. You just have to say that you came from MetaStock. The course consists of 5 modules or 5 parts. The evaluation and consultation is in the first trader's package and the first part. So there's no wrong or right answer to how you feel about it. There are 14 pages, and I can tell you exactly where your problems are and how deep-seated they are and what you have to do to overcome them. Trader's Secrets is about 14 people in other professions that have made what they've done. Murray Ruggiero writes their strategy out and evaluates their strategy. The business plan package number 4. The other one is 200. If you're listening in, it would be 150. The business plan package is package 4. These are the 2 most popular ones, and this is normally 150, and the price would be 125. In July, I haven't set the date yet because I just finished one. I'll be having a another class on recognizing 15 sabotage traps. So if you're interested in that, it'll be online. This is a paid webinar. And my top performance seminar, this is the one that both of the stories that I mentioned, both of those gentlemen took this. June is full. I do private seminars for people long distance online, and that's how to get in touch with me. Okay, are there any more questions? Okay, there aren't any more questions, so what I'm going to do now is I will ask myself questions and I will answer them. I have a fishbowl here with a whole bunch of questions that I've been asked before, and I will ask myself questions, and if you have, I prefer your questions, by the way. If you have more questions, please write them in. Okay, first question, how can I get off my emotional roller coaster? Okay, the way you created the emotional roller coaster in the first place is you have pictures in your mind. Those pictures have details. The details are what give you emotion. You change the pictures, you change the emotion. So do things like meditation, do things like listen to visualization tapes where you can relax. Certainly most of my tapes have that quality about them where you can have these visualizations. But all you have to do is change the picture, and do this in the morning when you're getting up and before you go to sleep at night. Just choose to have wonderful stories in your mind that will make you relax. That's something you could do on your own. The deeper stuff, well, you need work on that. Oh, let's see. Any more questions? No, from you? Okay. How can you overcome perfectionism? By redefining perfectionism. Perfectionism in trading is not all about making money with every trade. Perfectionism in trading is all about following your rules. If you follow your rules in trading, then you're doing a perfect job. Okay. How should I grow as a trader? You should grow as a trader by monitoring yourself on a daily basis and on a quarterly basis. Make sure that you take care of your psychological issues. Monitor when you go off course in your trading and pinpoint what created that, if you can pinpoint it. Read books on the psychology of trading. And always ask yourself, if I was in charge of this particular strategy, how would I improve it? Okay. What are the modalities you use in your seminars to overcome issues? I explained that one before. Neurolinguistics, timeline therapy, hypnotherapy, Gestalt, Feldenkrais. I use many modalities. Okay. Jeff, if you're listening, could you turn off the recording right